In this video, we will go over the remaining section, which is the cash flow from financing activities. We have done the cash flow from operating activities, we've done the cash flow from investing activities, and now we're on step 3, which is cash flow from financing activities. And basically what you're going to look at is long-term liabilities. Long-term liabilities is debt, right? If you borrowed money and received cash, you add. If you pay off debt with cash, then you subtract. If you sell stock and receive cash, you add. If you buy back stock or pay dividends, you subtract. And down here at the bottom, you will see long-term liabilities. These are the two for financing activities, right? So it shows you if you borrowed cash via notes payable or bond payable, add. If you pay off a bond payable or notes payable with cash, you subtract. If you sold stock and received cash, you add. If you purchased stock with cash, you subtract. If you pay dividends with cash, you subtract. And that is it. Okay, so here we have already done land. We used land in investing activities and furniture in investing activities, so we don't use those anymore. And now we're down here to the company selling stock, right? So it says this company sold stock for $101,000 in cash, right? So what's the rule there? The rule says that if you have sold stock and received cash, you add, right? So this is a equity item, and we receive cash by selling stock. So it says cash receipt for the sale of stock, and that's going to be the amount, right? You don't need to do any subtracting, any adding. You're just going to pick the cash number. Then it says company stock was purchased for $30,000 in cash. That means you spent cash to get that stock. So what do, right? If you purchase stock with cash, you subtract. So I'm going to put it in as a negative number. And then the company paid $4,000 dividends in cash. So pay dividends with cash, you subtract. I'm going to put in $20,000 negative because I paid dividends with cash. All right, and then I add these three together. So a negative 30,000 plus a positive 101,000 plus a negative 20,000. That gives me $51,000. And so you can see I have $51,000, and where does that come from? Most of that came from me selling stock, right? So the cash flow statement is really very informative because it tells you what's happening with the cash in the company. And again, the financing activities is easy. You just look at long-term liabilities and equity. Did any of these activities cause our cash to go up, right? Then we're going to add them. If any of the activities cause our cash to go down, we're going to subtract them. And it's that simple.